Hello again, Todd Clemens from Okeechobee Livestock Market, and here's your weekly market report. This week we had a really good run of cattle, big run for Monday, close to 1,400 head Monday, and for Tuesday a little over 1,400 head, so around 2,800 or so for the week. So we're getting into some big summer runs, and it always works out that way. The hottest week of the year and the most cattle traded, and shipping cattle going on everywhere, internet calf sales, shipping going on, just trucks running up and down the road, and heat index of probably 115 degrees, just unbelievable. But anyway, cattle are holding up good and cattle are weighing good. Pasture conditions are excellent down here in South Florida, and cattle are coming in a little bit heavier than people are anticipating. The market is steady in light of the fact that there are huge supplies of meat. Retail prices are still at a record high, I guess, all-time record high. Meat prices are high. The box beef cutouts, however, have dropped back down for tremendously high prices to price levels even lower than what it was pre-COVID. So hopefully we can get that meat moved out and get that supply chain taken care of. We've still got a lot of cattle in the feedlots yet that haven't been processed, and we're trying to get through all that backlog. So all the fundamentals are still the same. But hey, we'll make it through this year, and if we can keep these price levels on these calves right now where we are, everybody will be pretty happy, and we'll live another day. So not much change in the market and not a whole lot to report there. But on the other some other news to pass along, we're happy to let you know that we're going to be holding the Seminole Indian heifer sale here. They're going to have 800 or 900 head of heifers, and also they're going to have some Salicoa Valley bulls. Don't know exactly how many, but it's going to be a big day, and that's August the 28th. That's a Friday. Come preview the cattle that morning, and the sale will start at 12 noon, and that's August the 28th. We're happy about that. From the high prices for this week, we had a little old calf from Amy Newman that brought $2.25. The little calf weighed 195. And on the cow side, David Daniel IV, Okeechobee, had a 1,340-pound cow, brings 70 cents, bought by Florida Beef. And stay tuned for after this market report for a special guest. Leah Biondo from U.S. Cattlemen's Association will be on after the market report, so stay tuned for that. That's your market report. Thank you. See you next week.
Hi, my name is Leah Biondo, Director of Policy and Outreach with the United States Cattlemen's Association, here to talk today about the 5014 effort, or the spot market bill that was introduced earlier this year by Senators Grassley and Jon Tester of Montana. So I'll start at the top here, because in 2008, which was less than or a little over 10 years ago, the number of cattle that was bought through negotiated cash purchases was close to half of all total sales. So 54% of all total sales in the US, all total cattle sales in the US, were purchased through negotiated or cash market sales. We've seen that number drop since last year. We saw that number drop to an ultimate low of 24% of negotiated cash cattle purchases. So we've really seen that number cut in half in a little over 10 years, which is concerning, because when we talk about the negotiated or the cash cattle marketplace, we're talking about having a buyer and a seller. So you've got two different parties. They're doing a honest to goodness transaction. That's price discovery. Happens all the time in livestock auctions across the US. But when you sell via formula contracts, the price is discovered somewhere else and then brought to the buyers. And the price that's set by that negotiated cash cattle marketplace is the price that controls the rest of the industry, the CME live cattle futures prices. And when you have such a small volume of cattle sales that dictate what a fair price is, there's a high probability we're going to get it wrong. When you've got such a thin trading market, it's very easy for that price discovery and that transparency to go by the wayside. So what we're hoping to do with this 5014 effort is to flesh out that negotiated cash cattle marketplace, or make it thicker and bring it back closer to that 54% that we saw in 2008. So the bill earlier this year was introduced by Senators Chuck Grassley of Iowa and Jon Tester of Montana. 5 other senators signed on in support. We had Steve Daines from Montana, Joni Ernst from Iowa. We had Tina Smith from Minnesota, Cindy Hyde-Smith from Mississippi, and Mike Rounds from South Dakota. And what this bill would do is it would require that a minimum of 50% of a covered packer's daily volume of livestock slaughter must be purchased through the spot or cash market. Senator Grassley had introduced a bill, a similar version of this bill in 2002, but he wanted to mandate just 25% of the daily buy in his 2002 version of the bill. The one introduced this year would bring us back to what we saw in 2008, which is a minimum of 50%. And the covered packer portion in that bill description, what that means is that it's just a packer that's required to report to the Agriculture Marketing Service. So there's approximately, 18 or so companies that are required to report to USDA's Agriculture Marketing Service. We don't know the exact number though because of confidentiality rules. And those confidentiality rules really do put a veil over much of the information that is sent to USDA's Agriculture Marketing Service. So because of those confidentiality rules, we're not privy to the whole of information that we could be. We could have much more information on the market, but those confidentiality rules get in the way. And a covered packer is not one company that owns only one livestock processing plant. So any of the small to mid-sized packing processing facilities, this would not impact them, which is important to note because they've already got many other rules and regulations breathing down their backs. Last week, a House companion bill was introduced, a 5014 bill in the House was introduced by 3 Iowa Democrats. So Iowa's really leading the effort on this one. But this is where we could really use some help from Florida producers because there are 3 Florida representatives on the House Agriculture Committee, and those are Representative Al Lawson, Ted Yoho, and Neil Dunn. So that's 3 more opportunities for co-sponsors. The House bill only has 3 co-sponsors to the Senate's 6. So we could really use a few more in the House to really make sure that we've got the support that we need to get this bill passed. And what does that strategy look like? What does the rest of the year look like for this process? Well, mandatory price reporting expires on September 30th of this year. So we've got just a little over 2 months to really make some action happen on this front. And that usually doesn't happen. A lot of issues are kind of, laissez-faire. They don't have a set deadline. So it's interesting to note that now we've got a set deadline and we either get this passed or we don't. And of course, if we don't, there'd still be an opportunity through the end of the year to get this passed as standalone legislation, but that probability is pretty slim. This mandatory price reporting reauthorization is our ticket to get this across the finish line. And so what are we asking of you? We're asking you to pick up the phone, get onto your computer, even your phone, call, email, if you feel like writing your members of Congress, whichever way that you need to do to get a hold of them. Facebook messengers, tagging them in social media, that doesn't help as much as a true phone call to the office or a true email to the office. Those methods of communication get tallied up and passed along to the member of Congress. So we really do need producers to be calling or writing their members of Congress on this issue because it's going to take your support. This is going to be a grassroots effort. We're up against some tough forces. Obviously, the meat packers are against this, along with some other cattle organizations. And the 2 reasons for that are, we don't want to see any more government mandates. And this is going to cost the cattle industry, millions and billions of dollars or whatever the number is. And my response to that would be, we wouldn't need this government mandate if we had those confidentiality rules fixed, reformed, so that we can see more of the pricing information that the meat packers send. If we could have gotten those confidentiality rules amended, we wouldn't need this bill. But unfortunately, we received way too much pushback on reforming the confidentiality rules, so this is our only option. On costing the industry millions and billions of dollars, what they mean is it's going to cost the meat packers a lot more money. Producers are going to benefit under this bill. And we've seen packer margins soar in the past year. And so I think it's high time they pass it along to the producers.